Good afternoon, everybody. Welcome to TraderMerlin. It is your Tuesday edition. It's Trivia Tuesday. It's up to the wee hours of the morning crafting my trivia rounds for tonight. Should be a good, fun evening. Yes, I saw the comment there from Lori. Pretty green eye. Now, are you being observant there and thinking that the green eye is foreshadowing a bullish market tomorrow? Well, I don't know. I didn't make the color of the eye, but yes, the our wonderful AI-generated eyeball here, which is pretty impressively detailed, although the skin behind on the top part of the eyeball here almost makes it look like it's lizard skin. Kind of weird. Anyway, I just titled today's show, All Eyes on the Fed. Now, today actually did surprise me a little bit simply because of the volatility. I really expected it to be a very quiet day and not a lot of movement, simply because why build a position going into the Fed announcement? Kind of a foolish thing to do is to build any sort of large position going into a FOMC announcement, just because you just don't know which way it's going to go. So that was what the topic for today is. I will start things off by running through our top 8 markets. John says, $100 oil, here we come. Yeah, I mean, we were up a little bit today. We're only up 27 cents. You saw, let me bring up that chart here. You saw a nice long topping tail. Now, that said, for those that follow me and know the way that I look at things, hey, this looks like a great short opportunity tomorrow. You've got volume is higher than normal, not quite double. If you look at the bottom of your chart here on that futures contract, you've got volume relatively high. You've got a shooting star formation. I'm going to look at this line right here, drag that down. And the low of today's candle was $90.31. So if we open up, which we will, open up above that line and start to drift down, that might actually be a pretty good shorting opportunity. So I'm going to keep my eye on that one for tomorrow. The good news is I am still holding that Duke Energy. I'll run you through some of those numbers or some of the trades I'm in and positions I'm in after I get to this top 7. So let me start at the bottom. I still have my puts on the Russell. I have 80 puts right now on the Russell. Again, I mentioned yesterday that I was exercised on some puts that I had sold, and I just dumped that. Now, glad that I did, because it dropped a little bit more today. But what's noteworthy for me anyway, as someone who loves technical analysis, I have this giant head and shoulders pattern drawn that goes all the way back into June of this year. So you've got the left shoulder goes from June, peaks in mid-June, bottoms out in end of June. So you had a 1 month kind of boom bust. Then all of a sudden it makes a new high, call that the head, all the way to August 1st, sells off to a low point around August 25th before bouncing to a high right around August 30th, and now we are testing those lows again. So I like this because it still is an intact head and shoulders pattern. You notice that today's price action, not only did we come back down to the neckline, which is the sloping gray area, but also is those lows that we hit back on August 22nd and on the 18th. So all in all, I still like my short position. I would kind of anticipate there being a small little bounce based off of the demand zone that this neckline is creating. However, if we get down below this, I think you'll have a pretty quick fall. As I mentioned, the 1825 level is the obvious nearby target, and hopefully we'll reevaluate and see where it needs to go after that. But I do like this pattern formation I see here on the Russell. It was down 0.36% on the day, even though that's off the lows. It was, I think, down about 0.7% at one point, finishing at 1846. Now, climbing up that ladder just a little bit, it's the S&P 500, which is a much stronger looking candle. 44.91, so we did drop below the 4,500 mark, which fine, we were down below that yesterday anyway. But you notice this also has a bit of a hammer-ish, right? Typically you want to see that after a strong downtrend, not just a 2-day pullback, but kind of a little bit of a hammer formation here forming on the S&P. I'm not putting too much emphasis on that. What I did like about the S&P anyway is that it closed this gap that it experienced from Thursday to Friday, from the 7th to the 8th of September. So that's good that it filled that gap. A lot of technicians will look at that and kind of use that as fuel for the next big move up. So kind of ambiguous here with what my feelings are on the S&P. The Russell looked like a potential small bounce coming off of demand, and we might see a little bit of follow through here. But again, everything tomorrow depends on what Jerome Powell says. All right, indexes, wrapping up the bottom of the barrel here. NASDAQ was down 0.21%. It also has this similar, almost the exact same shape as the S&P, although it's a better looking hammer formation. we could drop down this line a little bit and maybe move it to right around 15,439 as being that next stop. Morning, Daryl and Pepe. Good to see you guys. And everybody, actually. We got some late ones coming in here. John D says, greetings, Merlin. It's been a hard catching you live lately, but they enjoyed the recordings. Cool. Well, I always look for the comments and feedback, so thank you for tuning in. Glad you could join us live here today. Interact. Let me know if there's anything you want me to cover for today's session. So both indexes looking pretty weak, although I will say if I had to, all things being equal, I would actually say that it looks like the indexes are going to have a little bit of a bounce tomorrow. Again, take away the Fed announcement. The Fed announcement is going to be driving everything tomorrow. So on a normal day, if it was just a regular, typical Wednesday, I'd say I would be bullish here, expecting a little bit of a bounce. But that Fed announcement could destroy all of that. All right, gold. Call it fairly unchanged. It was actually up just a little bit. You can see a small red spinning top here. That to me is a bearish indication. Why, you might ask? Well, because you have the price chart of gold has been drifting lower, and it seems like every rally just kind of gives up and doesn't move higher. And we've had a 3-day rally on gold. Today you have a spinning top, which is a sign of indecision. Typically that will lead to a reversal and see things drift back down here. So all in all, I feel okay with that. Hey, South Beach, Miami. A little late for spring break, isn't it, Lisa? Hope you're enjoying it out there. Top 4. There's your 10-year. Now, again, this is already rolled over into the new session, so you can see the Wednesday started up. So our 10-year was looking pretty good today. I think, Big Eb, you made some comment to that. Let me go back and check that one out. He says, yeah, the 10-year at the close hit a 16-year high today. Could be dicey tomorrow. Yep, and you can see this is the candle he's talking about. It's not the last one because that's the new session. But the high today for that 10-year was 4.371. And the last time we got anywhere close to that was 4.362 back on the 22nd of August. Now, if I zoom out even further, you can see it's been a long time since we've been up at those levels. So yes, this is breaking through that ceiling, if you will. You know, it's difficult. I hate to sound ambiguous here and kind of wishy-washy, right? I have a position built intermediate term. As you guys know, I'm short the Russell. I do think you're going to see that one head down lower in September and October. And what might be one of the catalysts for that? A surging dollar and surging bond yields. So I'm kind of using this chart as well as part of my factors for thinking bearish on this market. I do think you'll see this continue on up. We talked months ago about getting that 4.335 level, which was, you know, I had that line drawn in here for quite some time. And we've achieved that, and now it really becomes what's the next logical stopping point for that 10-year? Where's it going to go? I don't see it going down at all because they're going to be selling more bonds to pay for this ever-increasing debt until we come to some sort of reform. Of course, we also have the debt ceiling coming up. 4.67 is kind of where I think the next stop is. Right now we are at 4.36, and it may not seem like that much, but you get another 40 basis points to the upside, that could put further pressure on these equity indexes to go lower. So for the day, I look like the Russell, NASDAQ, S&P might have a bounce, but for the next couple weeks, months, I think you're looking at more bearishness. So, yep. I saw today a headline today that said oil to go to 300. Not buying that. No, 300 would be a bit of a stretch. You know, this is one thing that I've had to do with students over the years is put things into perspective. So let me give you an example. I've got an acquaintance that I know from Northern California, nice enough guy, but has no idea about how the financial markets work. And a couple years back, he told me he wanted to go buy all this Shiba Inu and go all in on Shiba Inu. I was like, you're an idiot. I'm like, why would you do it? It's straight gambling. That's not what you want to do to grow your money. You want to have a plan, steadily grow it. You know, obviously you want to increase your rates of return, but you're not going to get that 1,000% X that you think you're going to get in 3 days. So he asked me a couple of questions the other day, and I told him I could help him out. And he emailed me while I was in Jamaica, or texted me while I was in Jamaica. And he says, I'm looking for something that's going to get me, you know, a 4X rate of return. And he says, I've got a bunch of people that say that I should buy Microsoft and Amazon because those things are going to double in the next year. And I was like, oh. As Ron White would say with his glass of whiskey in his hand, he's got a cigar in one hand. He's like, you know what you can't fix? You can't fix stupid. Microsoft's not going to double in the next year. Anybody here who says Microsoft is going to double in share price in the next year needs to put down the crack pipe. You're smoking crack. So, how do we know that that's not going to happen with something like Microsoft, right? Okay, so let me just real quickly show you why when someone comes with this argument that it's going to double in the next year, you can just tell them to get the hell out. Right now, it's trading at $328. All right. Now let's go back and look at I need to go back and look at each candle here is going to be 12 months. These are yearly candles. So you're telling me that since its inception in 1996, that this security, which has moved up an astonishing 371,000% in 37 years, is now going to double its share price in 1 year, right? That is just stupid, right? I think you'd all agree that to say that it's going to double next year, it would just be stupid. Unless Microsoft came out with the most revolutionary, epic, unbelievable service that just changed the landscape of the markets overall. Sure, it could happen, but probability-wise, the odds are so slim for a juggernaut that big to double in size. Same thing with Amazon. So it's about being realistic. And for oil to get to 300, let's look at that price chart just to go compare apples to apples here. Let's go on a monthly time frame. I'm going to scroll back here, and I've got every piece of data I can look at on my charts with crude oil futures going all the way back into 1983. The highest we've ever seen it get was back here on June of 2008. Actually, I think it was actually July, but my mouse is trying to stick to that. A high price was 147.27. So you're telling me that someone has forecasted oil going to $300. And let's just put that into a nice little picture here so we can kind of see this one and what it means to you and I. Now, granted, no one ever thought it would go to negative $40 a barrel, but it did back in 2020, which blew my mind. So from current levels, if you got to 300, you're looking at an increase in the price of crude oil to the tune of $232. 232%. Is that possible? The answer is yes, of course. If we find that all of a sudden the oil reserves of Saudi Arabia and Russia and Venezuela and the United States are just not there, right? There's no more oil left. Yeah, granted, oil could be $1,000 a barrel. It'd be Mad Max type syndrome. We're all just kind of stealing gas and coming up with crazy ways. If you haven't seen Mad Max, by the way, check that one out. The original one is great. Actually, they're all pretty good. But the original Mad Max and the Road Warrior are pretty damn good movies. But it's about gas, right? Do we get to a point in our life cycle? Sure. I personally think that we will get to $300 per barrel oil, but that's going to happen probably in 20, 30 years down the road. Granted, we are shifting to alternative energies, which are going to take the burden of fossil fuels like crude oil. We're going to reduce that burden a little bit, but we're still consuming massive amounts, and there's only a finite amount underneath the Earth's surface. Now, granted, there is actually oil being created, right, as we speak, but it's such a slow process. It's the compression of organic material ends up making oil, but that takes centuries to get enough oil to appease the masses. So we are slowly running out. Maybe did the analysts give a price target on that one, Dave? He says, I headline today that said oil go to 300. I would actually agree with him. I would say oil is going to go to $300 a barrel. I can almost guarantee it. But I might not be alive when it gets there. I think you're probably talking another at least 20, 30, maybe 40 years before you see that. Because remember, we're going to move demand away from fossil fuels a bit and go towards more alternative energies. And we may discover some energy source in the future, which I hope we do, that takes us away from that. But if not, we continue to drive typical vehicles like we are today. Fossil fuels like oil are going to get more and more expensive because we deplete the resources we have. And supply is going to diminish, demand stays the same, price is going to shoot up. So while it sounds inconceivable to think $300 is a logical price target, I would make the argument that yes, over the next couple of years, no way, I'm not going to get to $300. However, over the course of time, sure. Yep. Now, it's kind of like saying, do I think that the S&P 500 is going to get to 10,000? Well, not tomorrow, not in the next couple of years, but maybe over the next couple of decades, sure. Remember, markets are built to go up over time. They're architecturally created that way. All right, what else do I see here? I'm going to go through the back chats here. Goldman Sachs or JP Morgan are forecasting oil above $100 in 2024. John, I think I don't remember the results of the poll. I think we actually did have more said that crude oil was going to be, I think we did, be over $100 at some point between now and the end of the year. I'm sticking to it. All right, I see a bunch of questions here. I didn't click it and give them the satisfaction seeking alpha. All right. If oil goes $300 a barrel, I will have to invest in a lot of firewood so I don't freeze this. For instance, it will be Bugatti. Are you heating your house with oil? If it is, it's a different oil. I don't think that's heating oil, which would be a different type of oil, I believe. But look, if oil gets $300 a barrel, the prospects of buying a Tesla or an electric vehicle start to look much more attractive. I'll tell you what, I'll be doing a lot more riding on my e-bikes, that's for sure. Let's see, what else do I got? Okay, heating oil. Yeah, that's a different type of oil. We're talking crude oil here, but I don't know the dynamics of heating oil, so I plead the fifth on that one. I'm almost to the top here. That was crude oil. We skipped the dollar index, but here's your dollar index. This is on a monthly. Let's go back to our daily here. Oh, come on, Merlin. Your charts are all wonky. There we go. So we had that hanging man formation, which I kind of view as a bullish formation, even though Steve Nissen says it's bearish. We've got our 2-day little pullback here. All in all, that is still a great uptrend for the dollar index. Not good for your overall equity markets. Heating oil prices follow oil. Okay. One thing I definitely do not know about, and make no claims to know about heating oil. Never use it unless when I was in Europe, I had heating oil. I was using the radiant heaters that they had in my apartments, which was kind of cool. And then lastly, let's go to our final one here. The B to the T to the C. Bitcoin starting to look good again. Notice it's been 5 days where it's been making higher lows, higher highs, a real strong, nice move to the upside here. So I'm feeling pretty good about that one. Again, I think that $28,000 mark is going to be the real critical point to kind of turn around this sideways chop we've had since March of this year. I mean, granted, it's been a huge range, but it really hasn't done much. And don't forget, we have the halving for Bitcoin going to come next year. In April, late April, we should get that, and that will start to the catalyst, I believe, for the next kind of bullish move in those markets. All right, let me go to... So you guys gave me a bunch of feedback on, me calling out or giving stock picks, which I've shied away from just because what happened on Power Trading Radio. I think I've shared that story with you. Just kind of left a bad taste in my mouth, and I decided I wasn't going to do picks anymore. But I guess I'm not really looking at this from a picks perspective. I'm actually looking at it from the perspective of these are trades that I'm looking to make. And again, this is not financial advice. This show is not about that. It's about just information and education. You have to take the trades you want or you think. So some of you, it seems like you really liked what I did on Friday when I went over those 6 different symbols. And that's fine. I can maybe do that. Maybe I have to run scans and filters on Friday. Depends how busy I am. But maybe I can do that, make that part of our Friday show, or maybe I'll make it a Thursday show. That way I can kind of create a day where you guys look forward to specific topics. So anyway, Alex said this. He said, thanks for going over your Friday picks. I really enjoy watching your thought process. Can you explain to me why you didn't take the EXC trade? I thought it met all your rules. So almost all of the ones I showed you guys yesterday met my rules except for Nokia, right? Northrop Grumman. The reason I didn't take the EXC trade is I had already opened the Duke Energy and the NI trade, which I still have both of those open today. Actually, let's just go look at them. So here's NI. If I look at these 3 side by side, right? So here's NI. I like the shooting star on NI the best because it was a shooting star, kind of came into this overhead area of supply that goes back into August. That one, I like that one, right? That was good. Right now, I'm up, but not as much as I wanted to be. I thought I'd actually see more follow through today. So unfortunately, this little post-market thing's going to obscure our vision, so I can't really hide this. But based off of just that shooting star and the run up into it, this was probably one of my favorites. My personal favorite was Duke Energy. This was number 2. And then EXC was number 3. It didn't have the same top. It didn't have really a shooting star. I mean, it kind of is. It ended into a session lows, which is great, but it just didn't look as good to me. And I'd already opened up 2 positions. I thought, that's enough for this one. I'll save some firepower for other things. In hindsight, I wish I would have taken this one because it's had a bigger fall, right? You've had 3 days in a row, a pretty big downside move here on EXC, Exelon Corporation, but just the nature of the beast. I had already opened up positions in NI, which we just looked at, which had a great shooting star. And then actually my preferred one was Duke Energy, DUK. So you had that shooting star up into this topping tail from a high that was put in on July 26th. So you kind of have this double top formation. I like that one the best. And yesterday I was kind of excited because it was down significantly and then came ripping back up. And I'm like, I ended the day yesterday on Duke Energy with a small loser. It was like, I don't know, 5 or 6 cents loss. Not that big of a deal. But I still held the position because I still felt it was going to come down. Now, got a couple of interesting things happening here. So this is Duke Energy. Down, 1.18% today. So great for my position. The question now is, where do you see this thing headed? And obviously the lows of 87 would be great, but I don't know if it's going to get there. So what I'll typically do is I break it up into different time frames to see if there's a spot where I might feel more attracted to, where I think it's going to be drawn to. And you notice on this 4 hour, it's kind of perfect right to the origin of this gap that went from the end of day of Wednesday to today, right? Or to the 14th. So you've kind of closed that gap. Some of you might be looking at these levels over here and thinking, well, it kind of was a rally-based rally, and the only level that I can look at on that 4 hour time frame that really appeals to me and draws me in is this zone way down here, right around 89, 82. So call it $90. Now that'd be $4 profit. At this moment, I only have 500 shares of this, so that's fine. That would, if you're looking at from my original entry, that'd be right around 5 points worth of reward, $5 worth of reward. Times that by and cut that in half, you're looking at $2,500. So not too bad if we get down to those levels, but I still want to look in further and see if I find anything else that I look at and go, ooh, that's a good one. So, I look at these things obviously from many different angles and many different perspectives. When I look at this, it does draw my attention to another level, which I'm just going to put a line on as a reference point for me, and that is right here at 92.28. So some of you may be asking, why not use this level over here at $91? Well, you'll notice that this tail has already come into it, hit it, and now rallied out. So I don't put as much emphasis there. Now, once I have those done, I'll just go back here to the daily, and that's how I'm going to be looking at this one going forward. So pretty simple. Merlin, can you have a show on sector rotation? I think I've done them in the past, Andrew, but I think we can rekindle that. It's been almost 3 years. Actually, when did we start this? 2020? Yeah, I've been doing the show for 3 years now. Holy cow. Yeah, we're 3.5 years already. God, time flies. So to answer Alex's question, that's really the reason why, is just that Duke Energy looked better and I was already in that trade. Wouldn't that level be tested already and look to go to the lower gap? Now I forgot what time frame we're on there, Chris, but we think we're looking at the hourly. Oh, that hourly is just great from the trend perspective. Love it. I think, are you identifying this lower gap here? Is that what you're talking about on the hourly? Just 87.50? I mean, that's certainly the one we looked at earlier. I'll put a line there anyway, just so I can have that one. Now, this is where it's just a matter of personal preference. I liked where it actually gapped up from. Some of you may actually put your gap lower at 87.17, but to each their own. Wouldn't that level be tested already and look to the lower gap? Well, at this point here on the hourly, I don't really see any other gaps other than this one down here at 87.52. This one here is just a retest of that impulse move, which is what I'm looking for. So, yeah, obviously I would love it if we got down to 87.50, but I'm going to be rather careful with this one. The good news for me in this trade, even though Duke Energy isn't necessarily crude oil, if crude oil starts to roll over because of that shooting star, then I think you can see much more downside movement for Duke. So I think I'm in a decent trade on Duke at this moment in time. Again, it's not that big of a position. My knee position is bigger, but that one doesn't look as good. Still a little bit weak, but nothing overly dramatic. So I had a question that I was going to... you guys tell me if you have any questions or comments, things you want me to go into. Just call it chart analysis. Yeah, it's funny, Margaret. A part of me thinks that you're right. The other part is, to get followers to grow channels, you got to have clickbait. I hate to say it. I'm not good at that type of stuff, right? I'm not a big clickbait fan. I just like to talk markets, but you gotta these guys that really grow their channels have just great clickbait headlines and say things that people want. Like I could do a show called, Get Rich Quick with Duke Energy. And I'll probably have 3 times as many viewers, but I don't ever want to be posting those types of things because to me it's wrong. You're not going to get rich quick trading Duke Energy. Yeah, I believe so, Big M. So one of the things I also do like to do is I'll go out, especially on something like Duke Energy, which I'm not really that familiar with. I mean, I know they're in the energy sector, but the question becomes, which market segment, which area of energy are they in? So easy resource for that is just to go to Yahoo Finance, and you can click on their profile, and it'll tell you what business they are in. So I'm just going to bring it up for you guys here. So there you go. Electric, regulated electric. It's funny because I actually thought they were gas too. Okay, so good. I was like, oh, I'm totally wrong then. I don't know if I want to be in that one. But you can see here they've got end user agreements. Segment generates, transmits, distributes, and sells electricity, coal, hydroelectric, natural gas, oil, solar, and wind sources, and renewable and nuclear entities. I mean, they are like all over the place. All over the place with regards to what they do. So I'm not hanging my hat on the fact that these guys are going to just tank and do poorly. It was simply a chart pattern, right? And that's kind of where I hang my hat is I'm going off the prices. I don't want to get too into the weeds on what they do or the fundamentals. Just show me the price, and that's what I'm going to be trading. Let's see. Clickbait. Best future strategy. Trading futures will grow. Yeah. I've actually seen those. I wonder who you're talking about. I've seen a few of those headlines. What about crude oil to 300? We already covered that one a while back, the crude oil to 300. That was Big Eb's. What was it, Big Eb? Big Eb commented on it. So we just, you might have taken a step away, Dave, but we did just cover that crude oil to 300. Yes, I do think crude oil will get to 300, but it's not going to happen anytime soon. I looked at bear call spread on Duke, but it's only monthly, so not liquid enough for me. Bummer. Well, I mean, in this case, when you look at something like this, Lori, you got to... Oh, thanks, Dave. I take things literally out here. You guys got to be careful. Lori, and this is an interesting one because it... Oh, good call. Yeah, I see what you're saying. That's actually not... See, and there I wouldn't feel bad doing that. Like, if I did a show said, crude oil to 300, that would be a legit show. I think I could do that. It's kind of like if you read I just posted the article for Bar Chart. Let me post that one in here. You guys all know my talk track for it anyway, because I've done that one with you guys here. But if you, I'm actually going to post this in the chat. What I'm going to give you guys right here is a list of all my articles for Bar Chart. So for those of you who might be new, I'm trying to write one a week, but I've been so busy I just haven't had a chance to. But I did GameStop boom or bust. I have an idea for one I'm going to try to release on Friday since I'm a week behind. But for those of you who like articles and want to see more in-depth analysis on things, you can check out that list. So that's my page on Bar Chart, and then the latest article will be at the top of that chart there. So the GameStop thing is terrible. Was Tom? Are you here? Did I see Tom in here today? Oh, I didn't see Tom in. I'll wait for Tom. Tom sent me an interesting message about... Sam's called that level. Tom said a very interesting thing. I mentioned the movie coming out called Dumb Money. Oh, you are there. Yeah, and, if you watch the trailer, they're trying to make Roaring Kitty sound like an idiot. Like he's just a doofus that just was there at the right... That's not true. I've seen interviews with Roaring Kitty. He's actually a very intelligent guy. Like, he's smart. He's not a dumb person. So, unfortunately, they make him seem like a frat boy doofus that just curses a lot. Yeah, and I guess that's just to sell and make it humorous, because you have to make all hedge fund managers look like assholes that are just trying to rip people off, which is not necessarily true. And then you also have to, portray the Wall Street, the Main Street guy as a dumb idiot. That's why it's called Dumb Money. But the truth of the matter is, Roaring Kitty is a pretty sharp guy. The trailer it's pretty funny. I mean, I'll watch it for sure because obviously I'm in this industry and I definitely have my feelings on what that industry did and how it worked. But my pleasure, Andrew. Thank you. I'll give you my review of the movie. I'm sure it's going to be pretty damn entertaining, especially with the cast of characters they have. Looks pretty good. But yeah, they do make him look like an idiot, and that Roaring Kitty guy is not an idiot. He's actually fairly smart. From the interviews I've seen, he's pretty bright. I commend him for what he did. You know, and it's in hindsight, I look back and like, well, why didn't I look at that? Because I look at short interest, but I just don't do short squeezes anymore. I feel like it's a gamble for that to pay off. And remember, if you're trying to be part of a short squeeze, you're betting against the hedge funds because it's the big money. The hedge funds, the institutions are shorting the hell out of that stock and pushing it down and 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 down. Well, you're fighting those guys. And in this case, that's what happened. The fortunate thing for Roaring Kitty and the whole, Wall Street Bets Reddit chat room stuff that he was doing, it was just power in numbers, where you had tens of thousands of people who don't really have that much money. They weren't out there saying, hey, I'm going to buy $100,000 worth of GameStop. It's like, okay, I'll buy $1,000 worth and $10,000 and maybe 20 or 30. And all of a sudden, collectively, it actually made a pretty big impact. And that little pop caused some of those shorts that needed to be covered. People got called. Their shares got called away. That adds more buying pressure. Then you had the full-on short squeeze pushed up, and then the gamma squeeze. I mean, it was the perfect scenario. But, one thing that has not been brought up, and I would love to... oh, great. How about a bad person? Thanks, Pepe. Now I'm the bad one. One thing that has not come up, and I don't know why it has not come up. I wish that I had an answer for this one. I'll keep it clean, Lori. No more potty mouth for me. My apologies. Sometimes I don't even think I'm cursing. It's just my natural speaking, but I will tone it down. How has it not become a federal issue in our court system or in Congress that 147% of the shares available were short? That means that not only every share of GameStop, but 40% more than existed were short. So to me, that is the question that hasn't been answered. That's fraudulent, right? You're basically saying, I'm selling you a bridge, but there's no bridge for me to sell you, but I'm just going to sell it to you anyway until someone calls me out on it. Their short interest should never be higher than 100%. That means every single share in existence would be short. In this case, there was 40% more than that. That's the part that blew my mind about the whole GameStop thing. What was happening was these hedge funds got greedy and they were over leveraging and selling short shares that they didn't have. Huge red flag, but why doesn't that come out? Why has that not been brought to a regulator? It should never happen. And Margaret says it right. That is another Wall Street trick. It is the man behind the curtain. All right, I don't drop the F-bomb on here. No, I definitely don't do that. I know that's rude. I think that calling someone a donkey or another name for a donkey would be, well, never mind, we have children listening. No, I think they're okay. Anyway, so that was my latest article, GameStop, boom or bust. It's funny because there's a couple headlines I read recently that said there are analysts that really feel that right now, GameStop is a value play. That based on its fundamentals, that it's a green light for a value play. So I talk about that in this one. Overshorting sounds like fraction. Yeah, exactly, Tom. But at least I understand the purpose of fractional reserve banking. While I don't agree with fractional reserve banking, I think we all do understand that if we did not have fractional reserve banking, our country would not be what it is today. They have to have money and lend out. In essence, our entire banking system and our entire financial system is to a large extent a Ponzi scheme. Your money has been lent out over and over and over and over and over again. Every deposit you make is being lent out to some extent, and it may not even be in that bank. So what happens is, they're counting on the fact that only a few customers are going to withdraw at a time, and they allot for that, and that's why they have the financial stability reviews. But if every customer decided to pull their money out of the bank, this country would implode. It's all lent out. It's gone out to buy houses and cars and build infrastructure and apartment buildings and build yachts, right? It's all money spent for capitalism. So, fractional reserve banking is a necessary evil. We would not be the country powerhouse we would be today if we didn't have fractional reserve banking. It's the extent to which the fractional reserve banking has pushed the markets higher. Like FTX monies. Yeah, the only difference there is FTX money, same with Celsius and Voyager and BlockFi. They were giving you returns on money, let's say 6% to keep your Bitcoin there, and then they were lending it out to somebody else earning 12%. And at a certain point, when you're in that pyramid of, okay, well, I'm lending to this first level of the pyramid and I get 6%. Well, that person's lending it out at a higher tier and they're making 7%. And that person lends it out at 20%. At some point, you're going to run out of people who are going to pay that higher price, and that's when they came crashing down. So that's what you had with FTX came crashing down, Three Arrows Capital, Celsius, Voyager, BlockFi, even Terra Luna was that basic principle of, at a certain point, you're not going to get that rate of return because there's nobody at that apex of the pyramid to pay you. It comes crashing down, and we've seen that over and over again. With the fractional reserve banking system, though, we do have the luxury of FDIC, Treasury Department, Federal Reserve. They'll backstop it. And in essence, they can just make a line item and create as much as they want. And, we'll pay it. It's okay. How long do we exist without fractional banking? Maybe SoCal Shacks wouldn't be selling for $1,000 per square foot to the excess money available. Well, I don't think, you're right. It's ridiculous. But it's not just SoCal. You could pinpoint go to any city in the United States. You name it. Just throw it up in the air and give me a name of any city. The infrastructure and a lot of the buildings that are there that make up that city was done by loans, right? Someone took a loan out at some point to build that apartment building or to build that home, right? A lot of this, it starts with money. Where they get the money from, typically get it from banks, which is done from lenders, and you and I are lenders. When we, the plebes, want to short, we look for available shares. When they are not available, we say, damn, and move on. Yep, these dirtbags says we can short whatever. Yep, you're 100% right, Larry. They can, because they're the hedge funds and they have the money and the institutions, they can say, yeah, well, we're shorting. We'll just keep shorting. And they over-shorted it. So bravo to what happened with Roaring Kitty and Dumb Money movie and the whole GameStop boom and bust. But it doesn't change the story that GameStop is our modern-day blockbuster. All right, let me real quickly go into your calendar for mañana. Obviously, the big story for tomorrow, central banks. The Federal Reserve, here it is. As you can see here, rates are expected. Right now, it's 99% probability that we are going to see Fed rates stay the same at 5.5%. We also get the SEP, which is a summary of economic projections. You also get their rate statement. And then at 11:30, so 30 minutes after all of that, we get the press conference. That, to me, is the exciting part. At this point, I think it's pretty much cooked that the rates are going to stay the same. Now, I personally would love to see a rate hike because it would shock the system. Markets are going to tank immediately if he comes out with a surprise. If that happens, I'm probably going to have to put a tight stop loss on my Russell and just let it go because it'll probably whip down really fast and then rip back to the upside. So I want to see it because I think it's going to be a lot of volatility. I think that we actually need to have that rate hike. I think it's better for our markets to do that just to make sure inflation, because it's already ticked up 2 consecutive readings on CPI and 1 for PPI. Those numbers getting higher is not really good. So I'd rather them be aggressive and kill this thing right now than play a cat and mouse game with inflation and data. So keep an eye on that one. If you are in positions, I would urge you to be careful, maybe scale out of those. As you know, what you're going to do is you're going to get these whipsaws. You're going to get big fluctuations in price. So do a live show. I can't. I've got some meetings going on tomorrow, so no live show for me. Oliver says the Powell hammer. Yeah, we may get that Powell hammer, right? We'll see what happens after that event and the press conference. But certainly on tomorrow's show, we'll talk about that. Oil prices could cause them to say they are raising at the next meeting. Yeah, right? I mean, that's certainly hurting. That's certainly hurting, is having those oil prices run up like that. Then Thursday, Bank of England announced the rates too. Yep. So you've got you have two. You have, is the Bank of England on Thursday? No, Bank of England is not Thursday. Oh yeah, I'm sorry. I was thinking Swiss National. So you have the Swiss National Bank. You have the Bank of England, and you have Japan. So here's Thursday. You can see right after the crack of midnight on Thursday. So we'll talk about this tomorrow, but they're expected to raise 25 basis points. The Bank of England expected to raise 25 basis points. And then down here near the bottom, you have Japan, which is staying at negative 0.1. At some point, I cannot believe this is going to keep staying at negative 0.1 when everybody else is just surging. You are basically having everybody dump yen. They're selling yen. Why would you hold the Japanese yen right now? You owe money. Sell your yen. So what you do is you go out there and you buy a currency pair. Right now we're at 5.5%, right? So you go buy USD JPY, which means I'm going to get that 5.5% for the US dollar, and then I'm also going to get an extra 0.1% for the Japanese yen. You notice that US dollar has been trending higher and higher. I mean, this year has been a beautiful uptrend in that US dollar. Why? Because Japan's not raising the rates. If Japan doesn't raise their rates and the US does, I mean, this is just going to continue to surge higher and higher, which to me is not good for Japan. I think it's really bad for Japan, but I don't know. I'm not an economist. I just play one on TV. So yeah, Ryan, you're right. Bank of England, Bank of Japan, as well as Swiss National Bank. So it's a busy day on Thursday, but really all the big stuff is happening on Wednesday. Buy a 0 data expiration put on those Russell shares, cheap protection. I guess I could do that. I don't know. We'll have to wait and see how it all pans out tomorrow. I'm going to be busy in meetings, so I won't have much of a chance to get involved with all that stuff. So that's your economic calendar for mañana. Obviously, big day, probably the biggest in quite some time. That press conference afterwards, I think, is going to be very telling to see which way we start to see their policy shift, their stance shift, and kind of what they're thinking for the market going forward. Now, as far as earnings go, we do have a couple companies reporting earnings. It's a kind of a light period, but we have, here's your calendar. You got FedEx, General Mills, and KB Homes are the two that will be reporting tomorrow. As far as today goes, you can see here, not much. Steelcase and AutoZone, so snooze fest with regards to that. All right, that's going to do it for me for today. I actually had an idea there was a question that came through about EV companies for Scott, but I think I'm going to do that show on Thursday. Tomorrow we'll talk all about the Fed. And see what the decisions were, what statements were made, and what the thought process is for Jerome Powell and the Federal Reserve going forward. So that's the show for today. If you guys have comments, questions, feedback, things you want me to see or talk about, you can do me a favor. You can email me at TraderMerlin@gmail.com or send them on in underneath any of our YouTube videos. I say any of my YouTube videos, and I'll answer those on tomorrow. So that's it. Thank you guys so much. Be careful out there. Lighten your load going into that announcement with Jerome Powell. It's going to be a wild one. I will see you because it's going to be a popcorn trade of the day. Don't know which way it's going to go, but we're going to see a lot of volatility. All right, my friends. I'll see you tomorrow. Take care.